Welcome back to Capital Luxury, where we decode the intricate world of luxury watches. Today, we're delving straight into the Rolex market, dissecting the recent price crash that has sent shockwaves through the watch community. In 2021, the luxury world witnessed a surge in Rolex prices, especially in the stainless steel sports models. However, fast forward to 2023, and a correction was in the air. Rolex prices took a significant nosedive, dropping by an average of 25%. What triggered this crash? The luxury watch market is a delicate ecosystem, influenced by factors like global economic conditions, brand reputation, and collector demand. Rolex, responding to heightened demand, ramped up production, leading to a surge in supply. As expected, the law of supply and demand kicked in, and prices tumbled. At Capital Luxury, we consistently advocate for strategic watch investments, opting for rare and selective models with low production levels, like those from Hublot and Audemars Piguet, can shield you from drastic value fluctuations. Oversaturation in the market tends to deflate prices, and stainless steel watches are no exception. The recent crash spotlighted popular Rolex models like Hulk, Pepsi, Batman, and Bad Girl. While they remain elusive and trade above MSRP, the key is the extent to which they surpass the manufacturer's suggested retail price. These models experienced a surge of 25 to 30% a few months ago, but have since taken a downward plunge. Consumer preferences and market trends play a pivotal role in the watch industry. Stainless steel Rolexes, though excellent watches, face a natural decrease in value when not limited in production and lacking strong demand. Specialty watches, like those from Audemars Piguet or Patek Philippe, retain value due to their exceptional rarity. We've warned about the risks associated with certain watches, urging caution in long-term investments. Watch trading emerges as a flexible alternative, offering financial returns and personal enjoyment. The key is to strike a balance between maximizing profits and minimizing effort. Since the onset of the pandemic, and particularly over the past 8 months, resale prices on the most coveted modern Rolex models experienced a continuous ascent. Now, as we navigate the present, that ascent appears to have reached its peak. According to Paul Alteri, the founder of Bob's Watches, an online dealer specializing in pre-owned Rolex models, the softening of prices can be attributed to the negative sentiment sparked by stock market declines. Notably affected is the Rolex Cosmograph Daytona Ref 116,500, introduced in 2016 at a retail price of $14,550. It soared to as high as $50,000 on secondary channels in May, but has since seen a notable dip, now ranging between $42,000 to $44,000. The trend extends beyond the Daytona, as other sought-after Rolex steel models have also experienced weakening prices in the past month. The Oyster Perpetuals, distinguished by colorful dials and introduced in September 2020 at a retail price of $5,600, peaked around $17,500 in April before stabilizing around $14,000 in June. Yet, Rolex isn't the sole player undergoing a correction in the secondary market. Audemars Piguet Royal Oak and Patek Philippe Nautilus models have seen declines of up to 20 to 30% since April, according to Eric Koo, co-founder of the watch auction website Loop This. Luxury goods analyst Jean-Philippe Bertschy of Von Tobel sees a correlation between recent crypto market shifts and the decrease in watch prices. He notes a past hype with newcomers viewing watches more as investments than timepieces, and the recent corrections as a sobering reality check for those who paid exorbitant prices for steel watches. However, this is no cause for panic, as Alteri reassures that it's a normal correction. Despite a softening of 5 to 15% across certain models, Rolex's supply issues persist, indicating a continuing demand. This correction primarily affects models that experienced overpricing. In the larger context, the luxury watch market remains characterized by ongoing polarization. Powerful brands like Patek, Audemars, and Rolex continue to dominate, growing stronger and outperforming others. While the present marks a period of price volatility, the overarching narrative revolves around the consolidation of a few dominant brands, leaving others to navigate a more cautious path. As we step into December, reflecting on the passing year brings attention to the intriguing developments in the watch market. Notable events include Rolex's surprising moves at Watches and Wonders, and the stark contrast between ascending retail prices and softening secondary prices. The gradual evolution of trends like diverse dial colors, case materials, and a shift to smaller case sizes has been a consistent narrative over the past few years. However, the current moment feels like a turning point, marking a departure from the predictable trajectory of 2022. The market, once characterized by the assurance that a watch would appreciate in value if obtained at retail, is undergoing a shift. The phenomenon is not exclusive to Rolex, but extends to limited editions, from various brands. Especially those positioned at the lower end of the price spectrum, have lingered in stock longer than anticipated, altering the dynamics of availability. Consequently, access to new releases from authorized dealers has become more immediate. The slow transition in the watch market is paving the way for a fascinating period ahead. As we conclude releases for 2023, speculation naturally turns toward what to expect in 2024. Here, I share 5 predictions that encompass watches, brands, and industry evolution. While these are personal insights, the unpredictable nature of the market invites diverse opinions, and I encourage your thoughts in the comments. 1. Lower prices. In recent years, the industry has witnessed significant price readjustments, with watches experiencing substantial jumps in retail prices. Economic shifts, including rising inflation, interest rates, and a volatile market, have contributed to diminished disposable income for many. Large luxury conglomerates are already noting softening demand. My prediction is a trend of price softening, already evident in the secondary market with reduced premiums and some discounts. Brands may need to react through measures like pausing further price hikes, reintroducing discounts, or launching more affordable options. 2. More color. A trend initiated in 2023, the use of diverse colors in watches is expected to gain momentum in 2024. The casualization of dress codes and a rising interest in watches as accessories contribute to the growing popularity of colorful timepieces. Brands are taking more risks and exploring vibrant and pastel palettes. Multicolored experiments, like Rolex's jigsaw and bubble dial launches, may continue, with expectations of new releases featuring earthy tones like off-white, khaki green, and brown. 3. Collaborations. Building on the trend of more color, collaborations in watch designs are likely to increase in 2024. From media outlets to franchise-themed watches, collaborations offer brands the opportunity to connect with new consumer sets. Limited editions resulting from collaborations serve as timely marketing, ensuring attention in the media and potentially attracting audiences previously unaware of luxury watches. The trend is an effective way for brands to resonate with pop culture and gain traction in the market. These predictions, while speculative, align with the evolving dynamics of the watch market. The next year promises to be a fascinating chapter as we witness the unfolding of these trends and the industry's response to changing consumer preferences and economic conditions. Share your thoughts in the comments below on these predictions. Stay tuned for more watch insights. Subscribe for updates and be part of the horology journey. The future of watches is here, time to explore.